And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we put you in front of where the action is in the broader markets, always with an eye toward helping you formulate a plan as far as your investing process, not only going into next week, but also beyond. And certainly we did have a very active week this week. The market's ending down. Let's take a look at our agenda. First off, we are going to go ahead and drill down, take a look at the current markets, and then, of course, from there, behind that, get really into where the markets stand at this point of time. Also, we're going to look at areas of strength. We are in a period of rising inflation. You're going to want to know where that is, the strength resulting from that is emanating from. We'll get into that. Also taking a look at stocks that were able to buck this week's downtrend. And the reason there is not only to uncover possible areas of strength, but also to point out that when the market pressures lift, these stocks potentially will go on to rise higher. Rally going into earnings. We are still in earnings season for Q1. We are certainly at the tail end, but there's enough going on. We're going to take a look at some stocks. There is a phenomenon that takes place. It's seemingly more pronounced this period where stocks will rally going into results for those of you that are shorter term in your trading. And then the search for downtrend reversals. Technology has continued to get hit down again, another 2% this week. So what you're going to be on the lookout for eventual turnarounds in these technology stocks. From here, let's go ahead and take a look at some of the headlines. And there was a lot this week. It was a very heavy week, data-wise and otherwise. First up, earlier this week, we did see news reports about labor shortages. Also, commodity prices continue to rise. That's spurring, of course, those inflation fears. And from there, we did get the Consumer Price Index, also known as the CPI, that came out earlier in the week, and it did soar to a 13-year high. So those consumer prices increasing rapidly really put the brakes on a lot of consumer discretionary. We hopefully will have time to get into those areas that got hit there. Later in the week, unemployment claims did fall to pandemic lows. So that was good news as far as stemming those inflation fears. Also, however, on the other side, we did see producer price or wholesale prices rise the fastest since 2009. So a little bit of mixed news there. However, retail sales and consumer sentiment, sales were flat, sentiment fell. Another area that also helped quell those inflation fears, but manufacturing output was healthy despite supply chain issues. So you can see we do have a lot in the way of potentially conflicting headline news, but it is all about inflation. This is what's driving the markets here of late, whether it is fears or those fears are quelled. So let's go ahead from here and dig right in. We are going to go ahead and start with a view of the S&P 500. We're looking at a daily price chart here. And as usual, I like to see how that index is performing relative to these simple moving averages. And we did close the week. Today we had a 1.5% rally. Didn't help the markets. It did close down for the week, but today's action did push the index back up above these shorter term simple moving averages. So that is constructive. We do have that relative strength RSI momentum indicator was able to tick back up into positive territory. However, stochastics they did turn, but they're not quite up above that 50 just yet. A little bit of lagging there with this momentum indicator, but by and large, we have enough happening on the positive side to have us comfortable with certainly the S&P 500. Of course, the NASDAQ is a whole different story. It still is trading below its 50-day. Those of you that are subscribers to my MEM Edge report, we will get much further into that as far as the outlook for the NASDAQ and underlying stocks within. But for here, let's go ahead and take a look behind that S&P 500 and really drill down. We're going to look at the S&P 500 sectors. I'm going to go ahead and add an RSI indicator and sort it in descending order because, as usual, we want to see where that relative strength is. So here we are. Let's take a look up here in this upper left quartile. These are your stronger areas, lower right, weaker. And we can see up here in the forefront, we have financials, materials, energy, and industrials. And this really is underscoring the move into these value stocks, cyclical areas, those areas that can do well, certainly in the beginning phases of a growth period for the economy, but also these anti, if you will, inflationary stocks. And that's going to be your material and energy or commodity stocks do tend to fare well when we are in periods of rising inflation. So hopefully we'll be able to get to some of those names. Certainly we will within these various areas. And then from here, of course, you want to be aware of where the weaker areas are. We talked about the NASDAQ. Let's take a quick look here at the technology sector. It did have a certainly healthy late week, up 2.2% today, but we're not quite out of the woods yet with technology. But given those growth, certainly possibilities within tech, you always, for my work, want to really stay on top of what's going on here in technology, what you're going to be needing to see to be convinced to go ahead and get back in. And then I talked about that CPI, that consumer price index number, really clobbered some of these discretionary stocks, but for real, they had been under distribution going into this week, really languishing a bit here. So this is an area that we are also on the lookout for. I talked about we are still in the throes of earnings season. At this juncture, a lot of these retailers are going to start reporting next week. So I'm going to share some of those names with you as well. But for now, let's go ahead and drill down even further beyond those sectors. From here, I've put in transports, software, semiconductors, oil prices, and so forth. Again, that RSI descending order. So this is taking us beyond those sectors. We want to really get drilled down a bit further. And up here in the forefront, this is another indication of an expansion period for the economy. We are seeing the Dow Jones Transportation Index really didn't fall very much at all and regained its momentum into the end of the week. And there are a couple of areas here within the transports that are really helping us. I know some of these rail stocks and others, transportation service areas, are picking up. And then from here, we can see KRE. This is the regional banking. We did see interest rates tick up this week. That's positive for these stocks, but also banks are integral when an economy is expanding as far as loan provisions and so forth. The Dow, this is a phenom that occurred earlier in the week before we fell out of bed. Industrials are the best performers year to date now. So that's a real shift in leadership, something that you certainly would want to be aware of. And then from there, drill down into, we did that last week as far as looking at those 30 components within the Dow to really sort out and uncover stocks poised to present well, given that the Dow is back up into an uptrend here. And then, so of course, we want to take a quick look here at volatility. It did spike here midweek, all about inflation fears. However, we are seeing a nice pullback. Now, I'm not familiar with this VVIX, but certainly we can look at historical precedent and know that inflation, that really heightened fear, was reduced going into the latter part of the week with those economic numbers that weren't quite as strong. And then looking at the other sub-industry groupings that our week. This is all about technology, semiconductors, and software here, down underperforming for the week. So that's a good look at where the markets are generally, certainly an overview, if you will. From here, we can take a few minutes and I'm going to share with you some areas of strength. Now, I did talk about inflation, and we are in a heightened state as far as some of these economic numbers that are pointing to growth perhaps coming at us a little too quickly, and in turn, labor shortages and other indications that we could easily see prices increase. So I'm going to take us to, let's go ahead to StockCharts, of course, and we're going to take a quick look at the top performing sub-industry group this week. The top performing sector was consumer staples. Now, that might appear to be defensive in nature. Normally, staple stocks are. They offer a high yield. They do also, a lot of the underlying stocks and companies in the staples area are defensive. They provide products needed regardless of the economy. But the recent move into staples at this point is all about those companies in this industry grouping that are able to raise their prices in the face of higher inflation. And so this is where we are seeing stocks really come into their own. First up here, we're looking at Hershey, HSY, of course, chocolate provider, 1.9% yielder. And we can see the stock broke out of a base back here in March and has been in a very confirmed uptrend, save for this little pullback here, and continues to appear poised for further upside. You really wouldn't know what was going on in the rest of the market while this particular stock took off. Let's take a look at another area, certainly in consumer staples, that are picking up. And we're looking here at PPC. This is Pilgrim's Pride Corp, and they are a purveyor of all things chicken. And this is a headline that I had read earlier in the week, actually maybe late last week, that chicken is in high demand. A lot of these certainly fast food related type companies are offering new chicken related products, and there is a shortage of chicken at this point in time. So take a look at PPC. We can see it is poised to break out of a nice multi-month base. This MACD, the black line up through the red, just turning positive. And then we already have that positive RSI. The growth prospects here for Pilgrim Pride, 92% earnings growth this year. They did report their earnings at the end of April. Very strong, 250% year-over-year growth. So certainly a very constructive looking chart there. Another chicken related stock that we can take a look at, because again, amid these shortages, certainly with chicken, they are raising prices and there's not a whole lot in the way of pushback. Tyson, TSN, this is another chicken products company. And this stock this week broke out of this nice 3-week base, nice volume characteristics. We do have that RSI, MACD just having that nice crossover here. And the company did report earnings, 88% year-over-year growth, and it is a nice 2.2% yielder. We're going to take a quick break. I have lots more to share with you in the way of staples, as well as commodities and other areas that we're going to cover. So we'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back taking a look at a few more of these stocks in the consumer staples area, again, with an eye toward their ability to increase their pricing given this higher inflationary period, but also higher demand as far as their products. So we're looking at Fresh Del Monte, all about pineapples, FDP. And let's take a look. This gap up here, and this is a concept that I have talked about in other, certainly a lot of other shows, because it is a phenomenon, if you will, that does occur during earnings season, where if the company does come out with stellar numbers, oftentimes you will see this gap up that will incur a base breakout, and then it's on volume. When you can marry that with outside momentum indicators, oftentimes the stock will go on to greater heights. And I'm pointing this out certainly because it is a staple stock, but also because of its classic performance subsequent to that gap up. We can see it had this very big move here, but oftentimes what the stock will do beyond that is pull back. It will digest this very significant gap up, in essence, waiting for this 10-day, this green simple moving average to catch up with the stock's price. That often presents itself as an ideal buy point, and FDP did in fact have another strong move, certainly this week. I did talk about earnings here, 158% year-over-year growth. I'm just going to share another chart view here on FDP that would be relevant no matter what stock you are looking at, but often it can be really quite helpful to look at that weekly chart when you are inspecting whether you should enter the stock. And we can see that FDP is in fact reversing a very lengthy downtrend. We're in the throes here of potentially breaking out of an 18-month base. Oftentimes, the longer that base breakout, the longer the advance out of that base. So from here, let's go ahead and take a look at just a couple of other names because we do have a lot to get to. I'm just going to share a couple more of these staples names. This is Archer Daniel, ADM. They did also come out with numbers here. The 158%. I'm sorry, 117% year-over-year growth. Archer Daniel, of course, involved in a lot of food products, grain, but we can see that nice base breakout upon the release of earnings, big volume pickup. It definitely is overbought here. This is that RSI above 70, and your MACD is in an overbought position. So I would look for a base period before a potential another leg up. One last name that we can take a look at here. This is a staple stock, Costco, and the stock had been in a very nice uptrend, pulled back with the markets, but we're seeing a big relative, certainly to the rest of the markets, a nice reversal here to potential new highs. And the move is all about Costco's ability to provide gasoline products. And many of you may know about the Colonial Pipeline shutdown. And what we're seeing is in the East Coast, there is a hoarding of gasoline. Costco has been a big beneficiary of that, certainly along that East Coast area. And then also they've been able to increase those oil prices. So there's anticipation that the May sales numbers for Costco will in fact be quite significant. So that's one to keep an eye. Last up here is Procter and Gamble. We can see that they have the company has come out and raised their pricing. Certainly mid-September, that increased pricing is really due to take effect, according to their CEO. So let's move on. Take a look at some of these materials stocks. And this is going to be, again, inflation driven, also demand driven, with the global economy beginning to pick up. I'm going to start here with some with gold stocks. We've seen a nice uptick here in gold prices over the last couple of weeks. This is GLG, that gold shares the S&P. So here we are. Some of this is dollar related and otherwise related. It's still viewed as a safe haven during otherwise seemingly turbulent periods in the market. But let's take a look at Newmont, NEM, and we can see a little bit sloppy here. This is not going to be for everyone, but I did want to point this stock out. It was up about 3% today, but more importantly is maybe the weekly will tell us an even better story, because what I wanted to share with you is that the stock has broken out of a very lengthy base. This is over a 1-year base, and we can also see some other characteristics that are starting to take shape here upon this base breakout. We do have that nice RSI up there, but this MACD, when we get this downtrend reversal, we're still pretty early innings here as far as potential upside here, all depending, of course, on your outlook. But the company is all about cash flow, and analysts are quite bullish on Newmont. Take a look here at a company that is not really a gold miner, but in fact, they are a gold royalty company. This is Franco-Nevada, FNV. I'm going to go back to that daily chart just to get a little different perspective here, because what I did want to point out to you again is what we are seeing. Certainly a good part of 2020 was very bullish for gold, but some of them have certainly fallen out of favor. But take a look back in positive territory up above these simple moving averages, and nice growth prospects here. FNB in a nice confirmed uptrend. Another South African company, GFI, is Goldfields, and we can see what I was mentioning earlier is that into mid-year bullishness among these gold stocks, but they are starting to reverse here. GFI back up above its simple moving averages, nice volume characteristics here. So it looks quite constructive. Moving on to other, certainly chemical areas, other cyclical areas that are looking quite constructive. This is Dow Holdings, of course, a chemical company, very agricultural related, and we can see that the stock is in a very nice confirmed uptrend. It pulled back very orderly to its 10-day simple moving average, but again has been able to buck the downtrend elsewhere in the market. They did report earnings 246% above estimates. The stock also has a nice 4.1% yield. And then one other chemical name that we can take a quick look at here is Eastman Chemical, EMN. Very nice confirmed uptrend here, and you can see can be bought on any pullback to that 10-day simple moving average. A little bit overbought, definitely bears keeping in mind, but it is a nice uptick there as far as uptrending period. So from here, we are going to go ahead and take a look at some stocks that were up this week. And I talked about that concept that these names definitely need a place on your watch list, again with an eye toward once these market pressures or we get into a more confirmed uptrend. Of course, you're also going to want to be in the right area as well. But we are looking here at Comcast. CMCSA is the ticker symbol, and the nice thing here is the stock did break out of a base, pulled back, but then is in the phase here of breaking back out again. And this is all about streaming. Comcast has a lot of internet related streaming entertainment and media that is pushing the stock out of that nice base, nice as far as the RSI and the MACD up here. So up on the week, and a very nice looking chart there. Another stock that is in that same internet streaming area is CHTR, and this is Charter, also emerging. It did emerge out of this nice lengthy base and into a confirmed uptrend. Let's take a look at just a couple of other names that, again, were up. This is another chemical related, DuPont, DD, again, in a very nice confirmed uptrend. The stock was up on the week, and another agriculturally related chemical stock. And I did not want to leave without talking about what we need to see for downtrend reversals. Let's just take a quick look here at the software grouping IGV, and this is all about technology. And we can see that it hit a new high back here in February, pulled back rather sharply, and then even more recently has gotten really hit quite hard. So what we're going to need to see to be convinced that this group may be back in favor is going to be a break back above those shorter term simple moving averages. Again, a lot of other dynamics at play here. These are the kind of things that I get into with my MEM Edge report as to what may be hindering any potential downtrend reversal. But certainly from a technical standpoint, we can be on the lookout for, this is HubSpot, one of the better known, certainly software type stocks, but we are going to want to see this type of action where the stock breaks back above its shorter term, each of its moving averages, RSI and MACD, turning positive. So I did want to very much take a quick look here at that. CRM, certainly one of the bellwether software names. Salesforce, really just a rather sloppy chart, not a whole lot to talk about there. So I'm going to move on to semiconductors, another big area among technology. Again, very beaten down, but there are a couple of stocks that have reversed their downtrends, and they are on the MEM Edge report. So you'll want to be aware of them. But of course, we are going to want to see the entire group turn bullish before jumping in. One last area I wanted to go ahead and review quickly here is that move and that rally among companies going into earnings. This is AutoZone, AZO. They are due to report on the 25th, and we can see that it is up for the week as analysts are raising estimates going into their earnings. Their last earnings report was March 2nd, and we can see the significant uptrend the stock was pushed into beyond that very bullish report. So again, not due until May 25th, but you can see that there are stocks that are rallying going into earnings. This is Intuit. Be aware that it is a software stock, but nice big move, up 3.5% going into their May 25th earnings. This is all about management coming out. This week, they raised their guidance for 2021 fiscal year earnings. So, of course, the markets like that. Another big one that is coming up on Tuesday. They're due to report next week. This is Target, TGT. Analysts are expecting this company to be very positively impacted due to stimulus spending. And then Walmart is also due to report. They're not having that that rally into earnings, but you're going to want to keep an eye on Walmart and Target to really give a sense of where retail may be headed. TJX is another company due to report. We can see it had that rally going into their earnings. And last up here, we can take a look at another retailer due to come out May 28th. And this is Burlington, BURL. Again, a nice rally going into their report. We can see their last report was the end of May, and this company did go into a nice uptrend following that. I'm going to leave it there. Again, go ahead and use that link below. Take a 4-week trial of my MEM Edge report for a nominal fee. We're going to talk all about where you need to be concentrated and those stocks that are going to benefit from the rotation we're experiencing in the markets. Have a great weekend. I'll see you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.